What is up, all of you beautiful subscribers? Welcome back to the Chapple Show. So what we're talking about today is actually 6 common myths that come along with investing. So 6 myths about investing. So let's just jump right into this here actually. So the very first myth I want to talk about actually is the myth that investing is risky. And this is the most common myth I hear all the time from average people that haven't invested any money, especially young people too. So investing in anything like the stock market, real estate, whatever, wine, collectibles, whatever, it's always risky, right? And so we're actually just going to stick to the stock market as our example as I talk about this point here. So investing in the stock market is risky. I understand why people think that. I understand why the average person thinks that, because when you think about the stock market, you think about crashes, you think about those jaggedy line charts, you think about stocks going up and down 10% all the time. I get it. I completely get it. But there are very safe ways, as you guys know, especially a lot of my subscribers, to invest your money. As you guys know, my strategy is one of the safest investing strategies out there, where you're not going to get super high, 15, 20, 30% returns, in a month, but you're going to get solid 3, 4% returns, 1% returns, 2% returns every single month, or close to it. You're going to average a solid return every single year. So how can you invest safely? Just a quick overview. If you guys are interested, I have a lot more stock market videos in my stock market program. You guys can check that out to see what I invest in. But as a general overview here, if you want to invest in safe stocks and have safe investments, invest in blue chip companies, invest in the McDonald's, invest in the Coca-Cola, companies that have been around for a long time. They pay you a dividend, so you're guaranteed to get back money every single year. If they pay a 2% dividend, so you can get back 2% of your money guaranteed in a return every year. Invest in companies like that have been around a long time. They pay a dividend. They're not going bankrupt. So don't go for those hot tech stocks that you hear about all the time. Don't go for the Snapchats all the time. Don't go for the Twitter all the time. Don't go for, whatever the person on the news and the talking heads always talk about as the new hot stock that's going to take off 10% this month. No. Stick to the companies that are going to get a good, solid, slow return every single year. And that's how you invest in a safe way. Investing can be risky. I mean, I understand why people can think it can be risky, because you hear all the time, especially on YouTube too, you hear the people that talk about penny stocks, right? There's a ton of penny stock people on the internet and on YouTube, specifically too. They talk about these hot penny stocks and how they're making millions of dollars through these penny stocks, and that shouldn't be how you should be investing, especially if you're a beginner. I mean, if you're really experienced and you want to invest in penny stocks, then go for it. Why should I tell you what to do? But if you want to invest in safe stocks and you want to have a safe return, you got to go with the blue chip stocks. You got to go with stocks that have been around a long time, right? Investing can be very safe. And actually, I guess we'll just touch on real estate quickly here, is that, one of the safest investments actually might be real estate. I mean, real estate might be one of the safer investments because, as long as we don't have another market crash, which is not going to happen, you're almost guaranteed, and you're good at renting, you're getting guaranteed returns, and you also get tax deductions. And real estate, it's a whole different ball game in terms of investing. But I do consider real estate probably a safer investment in the long term. But that's going to be a whole separate video here. So is investing risky? No, not if you know what you're doing. So we're going to move on to point number 2 here, which is actually that it's hard to get started in investing. So this isn't that I don't have enough money. We're going to get that in a second here. But it's hard to get started in investing. And this is just a really quick myth-busting thing here, is that it can take, and you just need to set up a brokerage account. So what is a brokerage account? A brokerage account is something that you need in order to trade stocks on the stock market. And for whatever reason, people think that this is a long process and it's going to take days or weeks. And sure, it might take a day or two for approval, but you can set up your account in 5 minutes, 10 minutes, 15 minutes. I mean, it really depends. If you are setting up your brokerage account or your stock trading account and it's with like your bank, or it's with someone that has ties to your bank, you can have one up in minutes. You just need to type in your information, have your, all of your information ready to go, and you're good to go. It doesn't take weeks, it doesn't take days of your life. It can actually take minutes to start investing. So that's another myth I wanted to debunk here, is that, yeah, it doesn't take a lot of time whatsoever. And I guess the other thing too, along with that point, is that, taking a lot of time to invest, well, I think that the biggest time commitment to investing is actually just learning about what to invest in. And that may only take a few hours. I mean, seriously, if you guys really wanted to and you know nothing about stock markets, I mean, you can take a look at other people's portfolios. You can take a look at, billionaire portfolios, see what they invest in. Warren Buffett, see what he invests in. You can take a look at mine. Mine's in my stock market program. Down below, you can check out to see my portfolio. You can check out other people on YouTube. They have their portfolios up. So even if you don't know anything about investing, you can actually just look up other people's portfolios and just kind of copy them if you really, really wanted to. I don't recommend that strategy. I do recommend, investing for yourself, learning how to invest by yourself and maybe picking up your own strategy for whatever suits your life. If you want to go risky, go balls out and invest in all risky stocks, you can do that. You might lose money, you might gain money. Or you want to be super safe like me and just have almost a guaranteed return on your money, you can do my investing strategy. So it all really depends here, but that's the biggest commitment, is just taking a few hours to just kind of learn what to invest in. That's the biggest time commitment you're going to have. So we're going to move on to number 3 actually here, which is it won't make a difference whether I invest or not. It won't make a difference in my life. And I can't believe I heard this. I actually heard this from people in university too, like it won't make a difference in my life if I start investing now, or if I start investing when I'm 40, or if I don't invest at all. This is the biggest load of crap you will ever hear regarding investing, if someone says this. So, I mean, I've done so many videos on this, right, about how investing even a little bit of money can make a massive difference in your life, especially if you start investing when you're 20, 25, 30 years old, or even like 18 years old. It can make a massive difference in your life because of something called compounded interest. Now, I've made tons of videos on this, by the way, so I don't really want to bore you about what compound interest is, but let me summarize here. If you started investing when you are, 20 years old, and you are able to invest even $100,000, okay? $100,000 over the course of the next 40 or 50 years, you can legitimately build a $500,000 to $1 million portfolio because of investing $100,000. And if you didn't invest at all, guess what? You only have $100,000. If you kept all of that 100 grand in your checking account, one, you're probably gonna spend it. So it's probably gonna go to zero or close to it. But two, that's only $100,000 versus a gain of potentially $400,000 to $900,000 in the long run here. And so think about that. Having a checking account with 100 grand in it, or even zero in it, versus having $1 million portfolio. That's the difference that investing makes. That's not, you're saying it doesn't make a difference in your life. By investing a little bit, that can actually make you a millionaire without you doing anything. Without you even earning $1 million in your lifetime, you can become a millionaire through investing. So that's a big myth here I wanted to debunk. Now we're going to move on here to number 4, actually. I don't have enough money. I don't have enough money to invest. So that's number 4. In some cases this can be true. But here's the deal here, is that if you make over 35 grand a year and you don't live in New York or San Francisco or LA or Toronto or Vancouver, you don't live in any sort of big metropolitan area, and you're making even 35, 40 grand a year, you have enough money to invest. You do. All you need is $100 a month. Nowadays, I remember when I started making these videos, even about a year and a half ago, when I started investing. When I started investing, broker fees were like 25 to $50 a trade. Okay, and so I would always recommend only invest $500 at a time. And now I still recommend invest as much as you can at a time, but now, if you're investing in the long run, you can seriously invest $100 at a time with, I would recommend probably $200 minimum, but you can invest $100 at a time. Each trade fee is $5, and so you can seriously invest $100 every single month. That's all you need, $100 a month. And so assuming even if you're living paycheck to paycheck and you only save up $10 a month, you save up $10 a month, there must be some ways where you can cut out $90 from your expenses. So whether it's the Starbucks, whether it's the eating out for lunch, I'm guilty of that too. I'm guilty of that. I like having $6 sandwiches. That's one of the things that makes me happy. But if you're I'm not living paycheck to paycheck. That's the difference here. If I was living paycheck to paycheck, there's no chance in hell I'm going to eat a sandwich every day, a $6 sandwich every day. But for a lot of you, that can be the difference between you starting to invest and not. Think about this. Even a $6 sandwich, okay? So a $6 sandwich, you have that every day, 30 30 days every single month. That's 180 bucks. That's a lot of money. And I'm guilty of that, but however, I'm making a pretty good income right now, so that's kind of okay for me. You know, I always talk about, you know, you can have those luxuries if you can afford them, but you shouldn't have those luxuries if you can't, right? So having a $6 whatever, a Starbucks coffee, a sandwich, you know, even $2, $3 meals at some place versus making some sort of $1 meal by yourself. That's $5 a day, every day, 30 days. That's 150 bucks a month that you could use towards investing. So that's just a really simple cure for that stuff. I know a lot of you might be living in paycheck to paycheck. I understand that. I don't want to be, you know, talking bad about any of that stuff. So a lot of you may have some sort of income problem. A lot of you may have an expense problem. Maybe you have medical bills. Maybe you have student loans that you can't bankrupt or can't declare bankruptcy on. I mean, I'm not saying that. A lot of you may have expense or income problems, but a lot of you may not. And so it takes only $100 a month to start investing. That's really all it takes these days. When I started, when I was 18, you know, 5 years ago, you needed about 500 bucks, roughly. You needed to do $500 at a time. Now it's 100. So I still recommend the more, the better, but that's a whole separate video. But yeah, so some of you may have an income problem. I mean, if you do, that's what you got to fix first before you start investing. Is if you do have some sort of income problem, you don't have $100 a month to invest, find a way to make more money. Do some freelance jobs. If you have any sort of skills, then you can go on Upwork.com or Fiverr.com or any of those websites and try to make an extra $5 a day, $10 a day, $20 a day, and that adds up. You can start investing that money. And so that's just a thought for you guys, or you can make your own side business. That is kind of a side business. So we're gonna move on actually here to number 5 because that's a separate video. I don't wanna talk about side hustles in an investing video. So I want to talk about number 5, the myth that the financial advisor knows best and the financial advisor will do what's best for me. Well, I don't know if you guys know this, but I have talked about it, is that only roughly like 10 to 20% of financial advisors legally have to have your best interest in mind. People don't really realize this, that financial advisors and people that handle your money or tell you what to do with your money, they get commissions to put your money into certain funds. Actual commissions. How messed up is that? Would you trust them now? Knowing that some of them can get ongoing commissions, some of them will get an upfront commission, but financial advisors actually get commissions for putting your money in certain funds. Whether they're the best funds for you, whether they're not the best funds for you, who really knows? Usually these funds are okay, but they have high fees. So what does this mean for you is that your financial advisor has to eat too. Most likely. They have to make money too to feed their family, and some of them are greedy, but most of them are just trying to get by making 50, 60, 70 grand a year. And so are financial advisors bad people? No, but just realize that a lot of the times, most of the time, your financial advisor is actually making money by just putting your money into certain funds. That's how they make money. So what I would recommend for you guys is actually like, if you don't even have to listen to your financial advisor. Seriously, invest on your own. I mean, there's lots of fees that come along with a lot of these funds that financial advisors put your money into, whether it's mutual funds, whether it's you know, something, whatever you'd want to do with your 401k or your IRA or whatever it may be. There's lots of fees that come along with those. So simply by investing on your own, investing in ETFs on your own, investing in stocks on your own, it'll save you a lot of money, plus you get to have full control over your money. It's not your financial advisor picking up fees on your money, putting you in X fund, and I don't know. I just, seriously, if you, make sure you really, really trust your financial advisor. Because for me, I don't really have one. I do have a, you know, a tax/accountant guy. I guess he's kind of like an all-around financial advisor, you know, tax, you know, he kind of does a little bit of everything. I do trust him. He's been a family friend for, you know, since before I was born. He was my dad's, you know, one of my dad's best friends. So we talk to him if I have any questions about taxes and businesses and stuff. So, you know, I think I do have one of the lucky ones. He doesn't pick up any sort of commissions when I use him for anything. We actually just pay him for his time, and that's it. So just make sure that when you do pick a financial advisor, or if you have one, just, yeah, make sure that they do have your best interests in mind, and make sure that you make them disclose whether they're a fiduciary or not, because fiduciaries have to have your best interest in mind. So I think we're going to move on from that. I think we're going to close it out with number 6 here. Number 6 is about investing is past performance equals future returns. And Oh boy, this is not true. So, StockX goes up 6%. StockX goes up 6% in 2 days. It goes up 15% in 1 month. It goes up 30% in 3 months. It does super, super well. What does this mean? Does it mean that it's going to continue at this rate? No. And this is one of the reasons why I make money and a lot of normal people do, a lot of average investors or newbie investors don't. It's because they bet on the hot stock, and meanwhile, you got people like me. So here's a good way to wrap this up when you're investing in stocks here. Is that what I like to do is I like to invest in stocks that go up, have gone up a lot, or have gone up gradually over the course of 3 to 5 years, and they're on an upward trend in the long run. However, I like buying those stocks when they've had a down week, or a down 2 weeks, or a down day, or a down 3 days. That's what I really like to invest in, is, you know, stocks that have gone up 50% over the past 3 years, or 4 years, or 5 years, but have gone down 5% in the past week. Those are the best times to start investing, in my opinion. You're getting a discount, a 5% discount on your investments a lot of the times. And so past performance, again though, like another good example here is that past performance doesn't indicate future performance. However, you know, I think that there's to a certain extent this can be true. I mean, companies like McDonald's, right? McDonald's has been around 60, 70 years or whatever, however long, 100 years, I don't know how long they've been around, since the 40s or 50s, a long time. Same with a company like Coca-Cola. I mean, they have gone up so gradually in the long run that they should at least go up somewhat gradually in the future. At least somewhat. They may go down, who really knows, right? But what I'm trying to say here is that if a stock shoots up a lot over the course of 3 months, it doesn't mean that it's going to keep shooting up over the course of 3 months. And the larger the sample size of history, so the longer a stock's been around and the longer a stock has had continuous performance, whether it's downwards or upwards, like downwards like BlackBerry, upwards like, I don't know what's a good one over the past 5 years or so, like a Facebook, or Facebook's nearing a peak though, but Facebook's a good one. So BlackBerry's gonna keep going, has been going down for 5 years now, and Facebook's been going up for 5 years now. That's a pretty large sample size. Meanwhile, you know, what's a stock that went up dramatically over the course of the last few days here? I don't know. I don't really have a good example off the top of my head here, but what I'm trying to say here is that look at the history of each stock that you invest in, and look at how they've performed, I guess is what I should say here. Over 5 years, not the past week, not the past 3 months. That won't tell you anything. That'll just tell you they've had good earnings, or they've been in the news and have done quite well in terms of media. But anyways, I think, sorry, that last little point's going to be a little bit confusing for most of you out there. But what I'm trying to say here is that past performance doesn't indicate future performance. However, you know, if a company has performed well over the past 20 years, and has performed well this year, it'll probably do well for at least the next few years. Meanwhile, a company that's just started and had a really big spike, has gone up 30% in 3 days, that doesn't necessarily mean that 30% trend is going to continue, because they don't have the history to prove it. I guess that's a good way to summarize it. So I think I'd like to thank you very much for watching. You can check out my stock market program in the link down below if you want to check out my investing strategy. It also comes with a wealth accelerator and all that stuff. Like 16 hours of content on there, so check that out. Yeah, thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.